Welcome back. While investing, subscribe, comment, drop a like. It's the day before Valentine's Day. Let's review our trades from last week and see how the portfolio performs and get ready for tomorrow. In anyways, invest your own risk. None of these are suggestions. Do your own research. So just quickly look at my portfolio. As you can see, the last day is pretty bad. There's a lot of drops. Some pretty major drops actually. I don't really care. What I care most is that I care more about the cash flow because in general, the stocks I selected have relatively good fundamentals or some really good technology cutting edge. So it doesn't really matter to me whether the price drop a little bit or not. I still have faith in them to produce me a good cash flow. Checking on my normal options, you can see the leap call on Apple still here. We don't really care. Let it rise its way. It's like almost 1.5 years to expiration. And we got 2 weeks market fear indicator, basically a volatility indicator, just in case you wonder where the name Volar comes from. 1 at 32, 1 at 22. Just don't really care, to be honest, until it hits one of those lower spots volatility, when the market emotion is a little bit more bullish and it VIX drops, and I'm going to cash out. Just be patient. So this week we got to keep the $292 premiums completely, and let's look at some trades we made. Nvidia, we bought. Remember last week we made a mistake to sell 4 shares of Nvidia, but we were meant to buy 4 for the month, so I bought 8. So that's the rationale. And Apple, I still I put at my previous cost basis, so I don't lose any money. Let's look at Apple. That was about like 167.5, and you can see our share price is approximately slightly touching that base, a little bit downward trend. So I was being a little bit careful there. You can see from the previous week, which is what I used to estimate, goes from like 175 to 171 ish. So there's like $4 of fluctuation, and seems like to be a downward trend. So it's reasonable for me to assume or estimate that that is like pretty likely that if I use that as a bound, I can see how it's quite likely to drop more than $2. So I set the price a little bit lower. Although otherwise I would set it even lower. And luckily, as you see at the end, this week's range from 171 to 168, or in fact 176 to 168, basically $8 spread, which is like double previous one, right? 175 to 171. So yeah, luckily we set a little bit more buffer down, and we didn't get assigned the call, assigned the put, cash secure put, excuse me. For the AMD one, I did this one cover call on Monday. I think it's actually my cost basis. Actually, my cost basis is like 110, but I 112. But I did lose money on options before, so the real cost base is a little bit different. We did a cover call at 131 because, as I mentioned before, AMD is a really volatile stock, and you can see that goes from 195 to like 132, which is past the strike price, and then down to 113 within a couple of days. in general, I think for this stock, I would be a little bit more cautious to add a little bit more buffer, so I don't miss out on the big rise and lose on the get assign my as a cash secure puts at the lower strike price. And next one is Nvidia. I just saw another cover call at my cost basis, and as you can see, it didn't get assigned because the stock price dropped. Even though it was a little bit lower, I still want to lose money, and as you can see, it actually touches my cost basis a little bit. So there was a good chance that I would get assigned. And there's some news to related to these two stocks. Apparently, don't really care. I think they deliver good products, have good, fantastic leaderships. Lisa Su and Jensen Huang, very good CEOs. So I just use them to generate cash flow. And this one, Snap, is actually a new one that I tried because they turned profitable, which is a very important factor for me when I choose a stock. So one of the most important factor. There's some exceptions, but in general, it's very important for me. Put it at $36 put. But I think it has some big retreat previously. That's why I did it. Yeah, approximately here, it retreated. There's like a big rise and it retreated again, so I set it below the retreat, and assuming because it already kind of corrected itself a little bit, so I don't have to set that big a buffer because the biggest news already happened here. And yeah, and this stock is a little bit more volatile, and when you take on more volatility, aka more risk, the premium will get higher as a percentage to the capital that you have to allocate to this option. So for example, you get about $73 for 3,600 of capital, whereas here you get like AMD, you would need $71. You would need 131,100 to get $71. Of course, there's this difference between how far you are to the strike prices at the time of the options, but that's a big consideration as well. Different stocks have different volatility. Like Snap is actually much more volatile than, let's say, Chevron or ExxonMobil and McDonald's, etc. And then I added a share of Google because I saw I was planning to build up 100 shares post-split, so I can perform options on it. Very good company, a little bit not sure about the CEO. Yeah, it did a pretty good retreat, that's why I said yeah, it's time to low in a little bit, to start lowering in. Even though we retreated more, but that's okay. That's okay. Doing a little dollar cost averaging, so I won't hit the peak of the price. And then lastly, we have Bilibili, which is one of my conviction stock actually, even though currently it's under a lot of pressure and a lot of money. Still my conviction. It's practically Chinese YouTube. Just imagine not having YouTube for the US. Your life would be very different. Very, very different. You won't even see me. So we have $41 for 37 call. I think I did it the next day. Instead of Monday, I did it Tuesday because when you do cover calls, you don't want to do it on a day of big retreat. Because stock kind of extrapolates downwards, whereas if you do on a day that the stock rises, it will extrapolate upwards. So Okay, people think there's a high ability that reaches that price, so the premium will get more expensive, so you can pay more. So here's a 7, right after the big drop, and now it corrected itself, so I loaded the option here. Loaded the price to be a little bit closer because I was trying to a little bit closer, but not that close, still like 10%, almost 10% away. So it's, knowing that it's volatile. So yeah, so that's the review of this past week's trades. And next week, I'm going to rinse and repeat, probably a lot of these trades. Not probably don't buy shares, but AMD, Apple, Nvidia, Snapchat, and Bilibili are my targets. Also looking to consolidate some of the smaller stocks. I can concentrate on the stocks that I have most faith in. As you can see, I'm getting closer and closer to 200 shares of Nvidia and 100 shares of Microsoft. Once that happens, I got more capital to generate cash flow. Google will get split soon. There's other stocks. Maybe it's time to consolidate them. Cool, that'll be the video today. Probably gonna send another video tomorrow. So see you guys. Take care.